A lot depends on what Mr. Trump does when he comes to the office, whether he's going to impose tariffs and do all the things that, candidate Trump said he would do, whether President Trump will be actually what candidate Trump is. So a lot hinges on what he will do. And I think the Fed is watching as well, very quietly. They're not getting involved politically, but they're watching very quietly. And they're concerned. And the Fed is data dependent. So, if inflation stays sticky, then there's a case for them to postpone rate cuts. But if the inflation numbers for some reason come down, they may cut sooner than expected. A lot hinges on the inflation data and inflation expectations, which will, be dependent on what Trump says and what he might do. Yeah. So, there is a case for some degree of decoupling among central banks. But again, it's not cast in a stone. Yeah. A lot depends on the data and the U.S. economy and what Trump does. And so lots of moving parts right now. And I think what the Fed has done is err on the side of caution, send a signal to the markets that, they're not ready to do back-to-back rate cuts, which I think is a sensible thing to do.
Yeah. The degree of decoupling, whether the Fed holds, slows down, or even actually has to go back to hiking, right? It's going to put a lot of economies and central banks in this part of the world in a pretty difficult position. It's not just the ECB, right?
Precisely. So what's going to happen is if the Fed doesn't cut as much, or in the worst case scenario, as you said, the Fed hikes rates, that's going to cause the US dollar to go up significantly. That's going to cause Asian currencies to weaken quite significantly against the US dollar and put lots of pressure on the central banks in this part of the world, and especially on capital flows into Asia. So it's something to watch very closely, the trajectory of the Federal Reserve, the trajectory of other central banks, the trajectory of the US dollar, and all that will have a bearing on the outcome for how Asian markets, emerging markets, and even developed markets like Europe perform. So lots of uncertainty still. And again, a lot hinges on what Donald Trump will do when he takes office next month.
Indeed, yeah. In terms of markets, right, we had an earlier guest who was describing, I think it was India, right, as the un-China.
Right.
Right. It's almost a mirror opposite, right? And we know that as China's gone through its troubles, right, a lot of foreign money has said, okay, maybe we'll hold on China, we'll pass. But hey, India looks good. Right. Japan looks good as well. We've talked about the Japanese market earlier on. India, it's gone through a correction, so it's 10% cheaper right now.
That's right. Yeah. You're right. So India is a market we are overweight on. We like India. We think there's a case for it. The China plus one strategy benefits India to some extent. India is doing quite a lot in terms of reforms to attract FDI into India. It's got a very young population, probably one of the youngest populations in the world for a very large economy like India. Growing middle class, which is underinvested in the equities market. You're seeing more and more money moving into equities from the domestic front. And and India is one of the fastest growing major economies in the world in 2025 as well. The kind of growth numbers that India has is something that many other countries are not even close to. Yeah. So I think there's a story for India. Again, it is not a 3-month story, 6-month story. It's a medium-term story. I think India is going through significant reforms, and some of the structural drivers will continue to keep the Indian market on the radar screens of investors for quite a while.